Hey there, Ryan here. I'm a lender here in Las Vegas. Today I'm going to showcase this $2.5 million beautiful home in Lake Las Vegas. I'll show you the views, some of the inside, the outside, and at the end I'm going to break down what a typical financing option would look like to purchase a home like this. Okay, so let's break down some of the financing options for this home. Since this home is listed at $2.5 million, it would most likely put you in the jumbo loan category. So here in Las Vegas and in most areas around the country, a jumbo loan is anything with a loan amount above $806,500. Jumbo loans typically require you to put a minimum down payment of 20%. There are some niche programs that will allow you to put less, but that typically comes at a higher rate. So we're just gonna look at what's typical here. Real quick too, I'm gonna round the purchase price to $2.5 million just to keep things simple. So 20% of that for your down payment would be $500,000. Now, what's left over is the loan amount, the amount that you're financing, which would be $2 million exactly. Now, for this example, we're going to look at a 30-year fixed loan. This is the most common option. You can do a term like a 15-year, which would pay off the loan in half the amount of time. And there are other options like an adjustable rate mortgage, but we're just going to focus on the 30-year fixed here. Now, interest rates will vary. This is based on a 740 credit score, and this is based on not paying any discount points, which would be a fee in order to buy that rate down. So as of today, the rate would be somewhere around 6.875%, and the APR would be 6.962. Now, your estimated payment would consist of principal, interest, taxes, and insurance. So principal and interest goes to paying the principal balance of the loan down over the 30-year term, and also goes towards paying interest on the loan. Whenever you purchase a home using a home loan, you have to have homeowner's insurance. It would probably be somewhere around $250 a month on this home. Now, I'm not an insurance agent, so I don't know exactly what it would cost. I'm just putting in an estimate on what's typical on a home like this. I was able to pull the property taxes from the Clark County website, and they're showing as $942.96 a month. So that would put your total estimated payment, including principal, interest, taxes, and insurance, just a little over $14,000 a month. Now, this home is located in the Lake Las Vegas community, and it's also in the South Shore development within the community. So there are a couple HOA fees that total about $494 a month. That's not included in your payment. You pay that directly to the HOA, but it's still a monthly housing expense. So we covered down payment and your monthly estimated mortgage payment. Now, we also have to consider closing costs. So whenever you buy a home, there are standard closing costs involved. So these are things like lender fees, title and escrow fees, government recording fees, appraisal fee, HOA setup fees, prepaid taxes and insurance. And, I'm probably leaving out a few. But on a home like this, what I see is typical when I look at other examples in the same price range is that the closing costs usually come out to about 1 to 2% of the price of the home. Now, one of the big factors that would determine the estimated closing costs is whether or not you are paying discount points on your home loan. As I mentioned before, this rate option is based on paying no discount points, meaning no additional fees to buy the rate down further. And an explanation on discount points should be saved for another video because that can be kind of a complex topic. But assuming you did not pay any discount points on this purchase, I would estimate your closing costs would be somewhere around 1.25% of the home price, which would put you about $31,000. So the total estimated out-of-pocket funds that you would need to cover down payment and closing costs would be about $531. Now, in some cases, you can get the seller to help cover your closing costs for you. I'm in no position to say whether or not a seller would be willing to help you with your closing costs, but sometimes it doesn't hurt to ask. So your total out-of-pocket funds to cover $500,000 down and roughly $31,000 in closing costs would be about $531,000. Now, this last item, reserves, is not always necessary. Sometimes you need about 3 to 6 months of reserves, sometimes more. And what that means is it's basically a rainy day fund to cover your payment in the event that you were to experience temporary income loss. So 3 months of reserves would equal the amount of 3 months worth of your monthly payment. So I just put this in here as an example. It may not be needed for your scenario and you may even need more, but this is not an amount that you actually pay to anyone. It's just an amount that your lender wants to see that you will have remaining in your bank account after you cover your down payment and closing costs. So hopefully you found that helpful. If you are interested in buying a home that would need a jumbo loan, I have a lot of experience with these and I'd be more than happy to help you. Please feel free to reach out to me. My contact info is in the description below. Also, I'm working towards growing this channel and I plan to provide a lot of more helpful information. So if you could do me a favor, please like and subscribe, and I hope to see you on the next one.